Hey guys, welcome to the Silver Report. Here we are, it's Saturday, March 18th, 2017. We have gold currently trading at $1,229.80. Silver's trading at $17.47. And let's get right into some of the economic factor that will be playing a part into the price of precious metals. And so, it's amazing when you're seeing these headlines recently that the reaction of the market to Janet Yellen's interest rate hike at the Federal Reserve, and how they're discussing that this is somehow supposed to show that the economy is doing well. The move implies the central bank has confidence in the economy. The markets are riding that confidence to push upward, but analysis of the fundamentals reveals that both markets and the Fed are missing something. And what you're being told, based solely on official government data, the economic situation today, it looks wonderful, right? The unemployment is supposedly sitting at 4.7%. A healthy level by historic standards. And so what we've also seen, there's the inflation. The Bureau of Economic Analysis, a sub-branch of the U.S. Department of Commerce, has great things to say about. According to the agency, prices rose by 1.9% over the last 12 months. Went from 0% inflation to 1.9%. The period ends in January. That's just 1/100% below the Fed's target rate of 2%. To top it all off, the officials say the consumer spending spiked 3% in quarter 4 of 2016. That's all well and good. It would be fantastic if these numbers were real. It would be fantastic because the government numbers cannot be trusted. The U.S. government's official story on the economy is hardly unbiased. They have a vested interest in keeping the markets calm, keeping the people silent, keeping the people appeased. If you ask, when you ask around and they're doing polls about the consumer sentiment, and consumers, like we see on the headline in the Wall Street Journal, the consumer confidence is at an all-time high right now, that the consumers are saying this is the best time to be alive right now. And they are completely and totally brainwashed. And that's exactly what we're facing in this country, is brainwashing. We're facing a slow, steady trickle of information that is so robust and covers so many different forms of media that people's minds are being manipulated about what the truth is. And so they have a vested interest in keeping the markets calm, appeased. Government entities tend to massage economic numbers to paint the best picture possible. So what we've seen from the Federal Reserve, people for some reason seem to think that this is an organization that is operating in our country to be able to make sure that our economy is healthy and safe. This is a foreign entity that is controlling the policy in the United States of America, the most powerful organization in the world. So, according to Mike Bryant, the vice president and senior economist at the Atlanta Fed's research department, the rubric for calculating official inflation numbers has a history of getting changed as often as every month, depending on which pieces of inconvenient input data the bureaucrats want to leave out for the given cycle. Labor statistics are just as susceptible to corruption. In 2014, the census survey collectors, whose work to go around calculating not just general population statistics, but unemployment, economic insights as well, were caught filling in bogus data simply to meet their quota, irreparably tainting any latter assertions based on collections work. Rather than collect fresh data each month as they're supposed to do, census workers have been filling in the blanks with the past month's data. This happens and it helps them with the strict quota and successful interviews set by the Labor Department. Furthermore, what the economy is really doing, while the Fed ramps up for more rate hikes and the government keeps peddling false hope, is there is a way to see what's actually happening in the economy. Yes, thankfully there is. It's called fundamental analysis. When we analyze the fundamentals, there's very little room for manipulation. Assuming we respect the numbers and evaluate them objectively, the truth has nowhere to hide. That said, consider what's happening to the consumer retail sector. Despite the positive tone coming from the Fed and the U.S. government, the latest numbers show retail sales are getting clobbered, especially department stores. Massive outdoor retailer Gander Mountain filed for bankruptcy just last week. The Financial Times reports non-food retail sales are dropping like a stone. And this stands in complete contradiction to what the Fed and the government officials are telling you. If the official numbers on consumer spending are this glaringly false, how can we trust anything else they say? And it's not the only ones. There are retailers going bankrupt all over this country. There are stores shutting down, malls becoming ghost malls, and yet consumers have this idea that we're somehow in the best. The stock market is not the economy. The Dow Jones Industrial Average is not the economy. Aside from being grossly misleading, here's the real problem. The gap between the Fed and the government's outlook versus reality, the more they push to convince the markets of the economy's strength, the more they set us up for a crisis. Look at the GDP numbers that they're pushing out. For quarter one of 2017, it's at 0.9%. It's below their other downgraded estimate of 1.2%, where it was above 3% at the beginning of this year, at the beginning of the election. And now they're at 0.9%. When Americans finally wake up and realize the Fed and the U.S. government were bluffing all along, there'll be no safety net to keep the economy from crashing down. So essentially, with the disparity of the American people understanding what money is, most people just go to their job, they go to their work, they get their check, come home, they watch their shows, they go to sleep, they get up, they go to their work. Either way, or half of the millennials are even not even in the workforce, not even looking for a job because they make more money from all of these entitlement programs than they do from getting a job. So the reality of what's taking place in our country is that the economy has been devastated. And it's showing some of the worst economic signs in recent history. On top of that, bankruptcies are on the rise, and they're going to raise interest rates after our credit has amassed the highest volumes. Our debt limit has gone up to the highest level in history. All right, thank you guys for joining me here on the Silver Report. If you like the content, be sure to subscribe, like the videos, share the videos, get the word out. I thank you guys all so much for stopping by. As always, stay safe.